all of you for joining today's webinar. So just a brief introduction to IG. For those who are new to us, I think some of the key points to take note is just that we are a licensed broker. And of course, we are incorporated in Singapore since 2006. So we do have a strong history in Singapore. And we are proud to announce that we are labeled the #1 CFD and FX broker based on the Singapore's investment trend reports in 2022 and 2023. Okay, just want to highlight a promotion that we are actually having for those new traders who are keen to open an account with us. So just 3 simple steps that you need to do to get up to $2,088 in cash rewards. So number 1, you have to open a new account. Number 2, you got to fund it with at least $1,000. And you just need to start trading with us. So how do you actually get that cash rebate? So it depends on the notional value that you trade. So if you trade more than 500K notional value, you'll get $188. Or even just placing a simple trade will earn you $50. And if you are more ambitious, you want to trade more than $10 million USD in terms of notional value, then you will be entitled to that $2,088 welcome bonus. So this is the promotion that we are currently having. If you are keen, do feel free to scan the QR code at the bottom left-hand corner. So it brings you to the page that explain more about this promotion, and you can also sign up an account right there. Okay, before we dive into today's webinar, just a disclaimer, today's webinar is purely for educational purposes only. It doesn't constitute any investment advice. So if you are doing your own trading or investment, please do your own due diligence. This is not any form of a call to buy or sell. And now let me just introduce the speaker with us. I think if you have been attending IG's webinars regularly, you would have known Quan Hao. He is a regular guest on our webinars lineup, and he has more than 20 years of trading experience. I always like how he shared his views because it's very unique the way that he thinks. It's not what you can actually hear from mainstream media, so on and so forth. So I really like the way how he analyzed some of the cross assets movement. He has also founded the Weipedia Private Limited. He is a SGX Academy professional trainer with SGX. And he also conducts a workshop for fund managers or prop traders. So clearly his experience in this trading field is very valuable to all of us. So that's why we always have him on board. So now I will pass on the time to Quan Hao for him to share his views on where the US market is heading towards.
Yeah, so thank you so much, Jun Rong, and it's always good to be back. Thank you, IG, for having me back again and again. Okay, I think time is very precious, and let me just go deep dive into what we're supposed to do here. Let me just get things organized. And okay, I think it's really timely. And of course, last month I shared about the China market, and I'm stating that the China market is potentially on its 3rd wave. Third wave, it means that there's those into elite wave. It means that it is 1, 2, 3. Third wave means that it's an impulse wave. Let me just go back here again. Give me a moment. Yeah. Impulse wave, and it seems like it is happening. And of course, back then, last month, the delivery is that I have no idea about the 2nd of April, the tariff shock wrought by US. So, and 1 month later, which is 1 month ago, shortly after we have a session last month, IG, Rafael, that asked me if I could do a topic in the month of April. And of course, back then, the planning, we have no idea if there's this 2nd of April. So it turned out to be very timely, but I would say that it comes with some planning, which I'm going to demonstrate to you later on. In fact, at the end of last year in December, that the market is showing us quite a clear sign that something is about to happen for US, but of course, back then I have no idea what is it. We're discussing about, I think that was last year, November, I have a session with IG as well. Could it be inflation? But having said that, the 2nd April, the tariff shock, it is related to inflation, which I'm going to unpeel part by part. Now, let's go to the topic tonight here. Are we at a crossroad for Wall Street? Means that we're at the juncture of, is it going to resume an uptrend, or especially after last night, right? Or is it going to come down? I think a lot of us are very anxious about US market because we have this notion that US market is going to, every dip is always a great opportunity to buy. So are we in that notion or are we not in the notion? So I'm going to help you to explore, to consider is it a time to buy in the US market or not? My answer is yes and no. I will reply to you why is a yes and why is a no. Okay, now let's look at now before we get into this topic, again, is the disclaimer here. Let me just try to get rid of this. I do not know how to get rid of the bar here, but anyway, what I'm going to share with you are purely for educational purpose, and it is not a recommendation. So what I share, definitely there's a lot of conviction that for my own personal consumption. Yeah. So, and of course, if you want to get into the motion or action after this sharing, so please consult your licensed broker, who is IG, and the team. They are always helpful. So there's something about myself for those who know me for the first time, that I enjoy doing quantamental analysis. It means that how I do is that I will look at the technical studies, where personally I believe that the technical studies will show me the sign, the timing first. Then after that, I will keep on looking out for fundamental development. It could be micro, it could be macro. Then if there's a match, then I will trade, hedge, buy or sell short with greater confidence. So I use quantamental analysis, which is technical studies plus a confirmation of fundamental. We're going to see that tonight. So I hope that what I share will inspire you to dig in deeper. And of course, again, there's a team of dealers who are able to help you. So do in IG, do explore with them how to do that. Now, so we have let me see. People can see you. Yes, that's right. I want people to see me. There's a message that float on my screen. So this is where we are today. And just to let you know, whatever slides that you saw here tonight is prepared about 2.5 weeks before today. So I also put a note here, 23rd of April. As of this afternoon, it was Nasdaq was about 18,276. So the low, it was on the 7th of April. So this dip from this high, the year high, to 7th of April is down 26%. So does it consider that we're in a bear market or not? So let me explain to you what am I seeing here. And the next question is that, is this bull is going to resume? Resume means that it is going to move up and break last year and this year high, and it's going to continue to move up. Or could this drop is the first crack followed by retracement? Maybe we're seeing right now in retracement and perhaps more correction to come. I think this question is important because then we know exactly how to position our trade in US. If it's going to be a retracement and we're going to move up, but the fundamental on the long term is still moving down, then I would say that if you have bought recently or you intend to buy, because I think there's some development on the tariff war that's going on, then I think we have to take a very quick profit, before it starts turning south again. But if you believe that the bull is going to resume, then maybe right now is the best opportunity to buy and hold a little bit longer. So I think this question is important. I think is in everybody's, every investors and traders wanted to know list. Okay, we will explore on that based on technical and fundamental reasoning. So let me just share with you some fun fact here. what are the signs of a long-term bull market turning bearish? Because the US market has been getting into the bull market since the 1980, 81 to be specific. And that means from 81 to today is about 25 years. Yeah, 24, 25 years. No, sorry, more than that, right? It is about 40 years, not 20 years. It's 40 years of bull run. So now, and some fun fact here is that why a bull is called a bull and a bear is called a bear. I'm not too sure if you know that. A bull is called a bull market is because, of course, market is moving up. It's because how they fight. You know how the bull fight is that with this horn, they always fight upwards, right? Yeah. Then how a bear fight is that the claw will smash downwards. So therefore, there's a difference between a bull and a bear. Bull represents market going up, and bear markets represents markets coming down. So just to share some fun facts. So these fun facts were shared by during my secondary school days. You know, one of the foreign students shared with me. I thought it's so fascinating. Anyway, now I think more proper right now is that let me just share with you the bull market over the long term. Yeah, in this 40 years of bull market, how to recognize that the bull may be looking a bit tired and it's over. So this is helpful in every market that I move into, including the gold. When I first started investing very seriously, that was in 2016, where I saw all this that's happening, including last month I shared about the China market. It is in a very skepticism stage, which I like it. Yeah. So, but where is the US market today? Now, typically, when the bull run over the last 40 years, if we find that it's about to end soon, typically it will come after a euphoric run up. Now, I'm going to share with you how to identify a euphoric run up. Because when the market is very euphoric, it means that there's a lot of chase after price, and that create an overvalue situation. Overvalue is bad, yeah. So, but of course, those are holding some position. Overvalue is good because you can choose to cash out, not all of it, but in tranches. Yeah, that's how usually I do that. If I manage to catch a beginning of the bull to a euphoric bull, I do not know where the high will be, but what I do is that I clear them through stages. So just to share some idea about how to take profit. There's no way that we will know where the high is. There's no way. But whenever there's euphoric move is good, if you're a buyer, then you just clear stages by stages. Then you kind of average out your exit point here. Now, I like what Sir John Templeton said. And then after that, I will superimpose that to one of the case study in Tesla. Then after that, I'll use it on the NASDAQ market. You're able to see in total clarity where is NASDAQ today. So he said that bull are born on pessimism, and bull are grown on skepticism, and then bull is matured on optimism, and then bull die on euphoria. Now, how to recognize every stage? I don't have time to go through every stage, but I think I'd like to address of how to recognize when the bull is at a euphoria stage, how to recognize them. So last month again, that we discussed about topic about China is on the third wave. And bear in mind, China, then we have no idea that 2nd of April is coming. Yeah, that was March. Yeah, so everything is not very clear about China, but yet I have this idea that could it be on the third wave that's coming. So if you look at China, where is it right now? I would say that China is in a very skepticism stage as of March last month. We are very skeptical about it, which exactly I kind of like it. So been accumulating a little bit here and there. So anyway, the topic here is tonight, how to recognize euphoria movement. Now let's look at this case study on Tesla. And Tesla, this was an all-time high. That was the last season, where before the share consolidation, it was priced about 1,200 US dollars. So we could see that I'm on the topic of bull die on euphoria. Now, how to recognize the euphoria is that people are chasing after the particular market. Now, in this studies is Tesla. Now, we could see that how to recognize euphoria is that we could see that this is quite smooth. Yep, this gradient is about 45 degrees. Yeah, so don't be too get too concerned about must it be 45-degree, but it's always compared to the past behavior. So as we at this point we compare to the past behavior, so definitely this is in a maturing stage. Now, as this one pick up here in 2021, that's where EV got hyped up. We could see that how steep the chase was. Yeah, how steep, especially when there's gap. Okay, steep, and when there's gap and a very short time, the market rally by more than 50% or one for a few four. This is the time that we have to recognize that could it be the bull market is in a euphoric stage. So in a euphoric stage, if you are you have bought, so what usually I do is that I will clear some position by stages. So again, I do not know where the high is, but I find that things are a bit pricey, overpriced. So, but if you want to short the market, because IG allows you to do that, they have their CFD. So what you could do is that you got to stand by and get ready for confirmation. So later on, I'm going to share with you when we recognize the euphoric stage, how can we get ready to do a cash out completely and also do a sell short subsequently. Okay, so this was in year 2022. Yeah, so we could see that there's a euphoric stage. Very clear. That means the angle got to be steep compared to the last phase. Yeah, so this phase was quite smooth, and there's run up. Usually there's some gap around. Yeah, because for individual stock you see some gap, but for indices, where we're going to explore later on, indices usually will not have gap. If you talk about the weekly chart that we're analyzing, so it's slightly different, but what we could see that there will be some steepness in the price behavior. So what happened then was then Tesla smashed all the way down. From the high to the low is down 75%. So to me, a down 75% is considered a crash, because for Dow Jones in 1929, the Great Depression, the market came off by more than 80%. If I'm right, it's about 89%. So to me, from a high to a low point, 75% is considered a crash. Yeah, so Tesla crashed. Yeah. So you could see that when the Tesla do a share consolidation, the price is different, but it's 1,002 here, and this would be definitely less than 600, but there's some share consolidation. So that fortunately, Tesla went into another phase, another cycle, is that it moved up again. But once again, if you could see that compared to the former up move, this up move is particularly very steep. Yeah, although I don't see any gap here, but it's very steep. You just got to be very careful. And on this mark here on the weekly chart, I'm not too sure if you're seeing. For those that are into technical studies, we already knew that fundamental BYDs already overtook Tesla. So when at this point, euphoria plus an inverted hammer. So to me, technically, it's quite clear cut that Tesla at the point was overpriced just at the beginning of the year, right? Or beginning of last year, or end of last year, beginning of this year. And BYD have overtaken Tesla. So and that's where we are today for Tesla. And just update you, the price for Tesla as of today is still hanging around here. Yeah. So now I just want you to let you know that this is in a way a positive example, because I think a lot of the participant will ask me about a kind of now the particular stocks or market is dead, you know. So is it going to enter into a new cycle? I say that really depends, especially for individual stocks. Sometimes it may not. For example, sometimes the bear never recovers. It means that the individual companies may go bankrupt. So you really have to look at it case by case. Yeah. So compared to a market of itself, a US market, of course, it will not go bankrupt, highly unlikely. But individual stocks, you will have to take a look at the business model itself. Now, for example, like this First Republic Bank, during the banking crisis not too long ago, so where is this First Republic Bank today? We could see that there's compared to its former, it's quite smooth. This was some kind of run up here, so there's some euphoric movement as well. But when it crashed, it is gone. It's completely gone. It's being delisted. Okay, so somehow I still have able to manage to capture this chart, I think we're quite fortunate. So what I'm trying to say here is that euphoric, we start in Tesla, it crashed, but you enter into another cycle, which is a good news, but not all the stocks are like that. Yeah, so you just have to be very careful on that. Now, let me just go to analyzing the current market today. The current market position, where are we standing today for the US market, of course? So I would say that for 2nd April is a very exciting day, and I personally like it because I'm both an investor, I'm also both a trader. Investor, I like the market to be smooth and continue to go up. But when I have the other side of portfolio, when I trade the market, I like the market to be volatile. So the market go extreme high and low, which I also like it. But I manage my both portfolio very separately. For my goal, for my China market, of course, you can find IG. I would tend to want to keep it for a long term. But moving forward for US market, especially on the 2nd April and onwards, I think market is getting very exciting. I would like to keep it as my trading portfolio for the US market, being the stock market or the indices. I would like to do that. Okay, so just to recap, personally, that's my personal portfolio. For commodities, for China market, for Asian market, I would like to buy and hold for a bit longer period. That's my personal portfolio I'm managing right now. But for the US market, I would like to trade them because volatility is great. Now let's look at the Dow Jones. Where is the Dow Jones today? Like what we discussed. And I personally felt that during the mass adoption of EV started in 2021, around there, that I could see that market was particularly very steep. Yeah, so it was already euphoric. And of course, then it come with COVID-19. And then it come in with a new phase of euphoric movement, which is the launch of ChatGPT, the AI, and the market got very steep here as well. So there's, of course, on a bull market for the last 40 years, if I'm able to narrow down for the last 5 years that I felt that I got to be very cautious about the US market, I'm not exactly wrong, which is right now, where are we heading? Are we, the market is having this deep, going to resume its bull market, or this correction is going to be deeper? So later on, I'm going to bring you back to study all the bear market over the last 100 years. So we're able to do a comparison to know that where are we standing today. That market have dropped about 26%. Is it enough or not? Yeah, so that really depends on, like what I say again, did I say that earlier? The only certainty today is uncertainty, which is great for traders, not exactly great for investors, because we like a certainty of value to come over a long period of time. But as a trader, since the only certainty is uncertainty, I will enjoy trading the US market. Yeah, so we have to be very nimble on what is coming ahead. Yeah, so we're going to get into that later. So with the euphoria that I'm seeing that that was starting in 2019 with the mass adoption of EV, we saw a euphoric movement. I cannot deny it because that's what I'm seeing here. Okay, it means that we have to be very careful. So over the last few years, I've been saying that I'm cautiously bullish about the US market. Yeah, I'm cautiously bullish because of my view that I'm seeing that you could see the gradient, the angle of the move is very euphoric. But what determined the switch is that did we identify the peak where I'm going to share with you at the end of last year, at the beginning of this year, I saw that we discussed about this. We could see that there was this inverted hammer. This is a 3-month chart. It means that from last year, the last 3 months, from October, November, December, it closed with inverted hammer. And this was this year, January to March, it closed with another inverted hammer. And this is what I call a double top, if you can see very clearly. So at the close of March, I'm very clear technically that something seems to be happening, where all this while I'm a little bit cautiously bullish until the last quarter of last year and the first quarter of this year. I saw this fog over here, which is two inverted hammer, which I also classify as a double top. So at the beginning of April, I'm keeping my ears open and eyes open and see what's going to happen. Then, of course, on the 2nd of April, we have this Liberation Day tariff. So to me, it's a big news because it's a fundamental shift. So earlier I mentioned about I will advocate the skill base is that personally I use technical analysis to time the market, but once the fundamental development also comes in, when I confirm it, I will take a very firm action on my portfolio. Now, so what we saw is that, just to recap, technically we're seeing a two inverted hammer, which is also a double top. On 2nd of April, it was an announcement of the Liberation Day tariffs, which is a total shift of the last 40 years. Since the 80s until now, fundamentally something have shifted. Now let's look at it on a fundamental front here. So what did Donald Trump say? Of course, we know about the news. The day was on the 2nd of April, so we have this image that he present to his audience, the chart of tariffs. So it shocked the whole world. And to my surprise, our PM also come in with a very firm statement. I think that it was very well said. I personally like it. And what was the title is that Singapore must brace itself for more shock after US tariff. Now, he says that, now he himself, PM Lawrence Wong, say that it marks a earth-shattering, earth-shattering change in the global order. The era of rule-based globalization and free trade is over. It started from WTO in the 90s, but this concept was being first coined by Ronald Reagan. He wanted that, but he didn't stay long enough. Of course, there's only 2 terms, but WTO only established after his term. So what we experienced in the past 40 years, fundamentally something have shifted. So this one we have to recognize. I know overnight, President Trump said that he may not sack Federal Chairman Jerome Powell, and the Treasury Secretary also mentioned that that there will be some adjustment to the trade tariff. Yes, things are very volatile. We're not sure. I do not know. But you know the stance is that the world order will never be the same. Yeah, so we just got to keep watch very closely and what's about to come. Now let me just share with you the next slide. Why is it so important? Because the fundamental have shift, not just the technical. If you try to spot for this double top with 2 inverted hammer, in the span of the historic of Dow Jones indices, I don't think that you can see that, right? So I'm talking about the last 40 years since the 1981 to today. Can you see that there's 2 inverted hammer forming a double top over this last period? I think to me, the answer is none. Okay, let's study about what caused the US market its golden years. Yeah, this super bull run. It was between this period when Ronald Reagan is a president of the United States for 2 terms. He promoted actively on global capitalization. It is until 1995 that the WTO replaced the 1947 GATT system. Now, marking the start of the modern rule-based globalization with a unified system to promote free and fair trade. And it benefit United States. It benefit the Dow Jones, subsequently S&P, and then subsequently NASDAQ. Then we could see that if I'm going to tie to this timeline, this fundamental, it started to move up. And when WTO take place, it move up even more. So when QE1, QE2, QE3 started, that's where they discovered they can follow the Japanese style of QE. And QE did not invented by the US, it was invented by the Japanese. Yeah, so they find that it works. So of course, then there was a crisis. They try it and it works. And but of course, the side effect of quantitative easing, which is the central bank print money and buy into their own bonds, is good in the mid to short term to mid term, but it's harmful over the long term because it creates inflation. So now you know why the world is having inflation, and I cannot say that it's solely by US, because a lot of other nations are doing that as well. With QE, the Japanese started it, then the US started to give QE, then subsequently the European other nations also have their own style of QE. So basically it's print money and buy their own bonds. The yield effect is that it creates inflation. So now you know that why the whole world is having inflation. Yeah, so, but I believe that Singapore are doing it, the money supply is doing very responsibly. So therefore, inflation numbers are quite manageable. Yeah. So this what happened here is that for US, when they print money, buy their bonds, what they do, and not just them, but other countries, that they will have export, especially for US dollars, export the US dollars overseas, then therefore this inflation is also exported to many part of the world as well. So now you got a whole picture here. But what I'm trying to say here is that this very rule-based globalization, and it seems to be coming to a cease. Yeah, so it's very important things that we have to know. It's not just technical, it's showing me on the long term. So I got to be very careful here is that, to me, I'm going to give you a very outright clear answer here is that is this rebound that we're seeing over the last few days since the 7th of April is about more than 2 weeks already. This market has been staying afloat for a little while. Yesterday pushed up a little bit. Is this going to be making a U-turn and move up and break this high, or is it going to be a retracement for more selling to come? And my view, it will be the latter, which is for traders. Look out for opportunity to buy. That's what I'm doing here. But I'm mindful that the long-term trend, perhaps the peak has already formed last year, this year, same high, almost the same high. And I think the correction may be deeper into many quarters and perhaps to the next few years. So we're going to see that the market is going to have a deeper correction to come. So that's based on my analysis. Why? Because technically is a very strong signal here. And fundamentally, you also conclude to me that the end of rule-based globalization. So to me, it makes perfect sense for me to buy on short term, and I do not mind to look out for opportunity to sell short and hold it for longer when opportunity arises. So that's my plan when I trade the US. It's going to be as such. But for the gold market, which I think over the last 2 years or 3 years, when IG we talk about commodities, I'm passionate about gold. I've been buying and holding gold just for long-term growth. And last month, where I present about the China market, Hong Kong China market is also for a long-term hold, and that's what I'm seeing here based on studies. So again, it's not a recommendation. So these are based on studies. Let's move on. So, and then 21st of March, we have the FOMC meeting, the last FOMC meeting. The next FOMC meeting will be on the May this year. Now, so March, Jerome Powell said that, now again, the time is important, that the 2nd April, the tariff shock has not happened yet. So that was 21st March. And Fed said that they are in no rush to cut the interest rate. That was his stance back then. So a lot of economists, market watcher, seeing that this year there will be at least 2, maybe 4 cuts this year. But in 21st March, he said that no rush to cut, wait for more data. So this is what he said. And he said that the economic activities has continued to expand, so which was good. Yeah, so therefore a lot of economists or analysts expect him to this year to cut rate. It makes sense. That was in March. Yeah. So unemployment rate has stabilized, which is good, and is really incentive for him to cut interest rate. Now, so for some of you may be asking me that why cut interest rate is good. Of course, it's good because when you cut interest rate, businesses, listed companies will borrow money to expand their business. Yeah, to buy machinery, all this and that, because the interest rate are lower, it's cheaper to borrow, so which is good. Now, but he said that the inflation remains somewhat elevated. He's not sure. So therefore, based on this 3 reasoning, although the economy seems to be good, unemployment is stabilized, but he's not exactly sure about where inflation is heading. So for that reason, the last meeting, he decided to stay the interest. And he said he will continue to watch. He will not be too rushed to cut the interest rate. Yeah, so he want to stay. Now let's look at the impact of inflation. So what we're seeing here is the rate is inflation. That's where in June 2022, we all knew that. I think we all can remember what happened to June 2022. The inflation hit the high of 9%. The last maybe coming to 40 years, we have not experienced that, but it was pretty scary. And Singapore inflation hit a high of 6%. Yeah, so now it has come down. But I want to see the risk of inflation in the global market. If it start to make a U-turn to hit 4, 5, 6, I hope you will not go beyond 9%. So we could see that when inflation move up, then the Nasdaq came off down 38%. Yes, from the top to the bottom. So now, where is inflation here today? Inflation is the good news is that from 9% you have come down, and therefore the stock market has been going up. So my team for last year to this year, that means my projection, and for this year to this year, next year, is that my team before 2nd April is that my focus is always about inflation, which I think it's not just me, many investors view that we're not exactly sure that whether the central banks around the world have gained victory over inflation. We're not exactly sure. So, but we could see that the risk of when inflation starts to move up, how risky it is in the asset class, it will move down. So, of course, until 2nd April, I have a more clearer view that why inflation may pick up. I think you have a clearer view as well. Now, so again, on 21st March, when Jerome Powell during conference, he said that he has no idea what is coming on 2nd of April, which I believe. Now, he said that why he did not expect to cut interest rates, no rush to cut interest rate. He made this statement. It means that it's just really hard to know how it is going to work out, which is about inflation. Yeah, he have no idea. So same for many investors, we are keeping watch very close about inflation numbers. Then he further add on, say that that probably has to do with the turmoil at the beginning of the administration, which is Donald Trump, that's making big changes. It seems like he's a prophet, he seems to know something that's coming up. So, but of course, I believe that there's no internal discussion. He's not knowing that, but he's feeling uneasy. I'm feeling uneasy as well as of the quarter of 2024 closing and the first quarter of that closing. About the close, I'm seeing a double top. And that's why in 2022, I think central banks around the world also seeing that. We could see that for the first time in history in 2022, 2023, 2024, central banks around the world has been buying a lot of gold, yeah, in case you missed that. So let's move on. And when we look at inflation that is reported to us, most of us or the news media will publish the CPI. Yeah, so the CPI, and Jerome Powell target is 2%. But later on, I will recommend you to look at the core PCE instead. Now, because when Jerome Powell said that the inflation, he wanted to see it to bring it down to 2%. His target is 2%. I believe that it's not referring just to CPI. If you look at the history about 2%, this is 1 to 2% range, which I've indicated. You could see that, of course, during this period, inflation was low from the 80s to 2022. The interest rate was low, but you look at the inflation is pretty volatile. Yeah, is above the 2% range, right? But let me just switch over to the core PCE, yeah, which I explained here, minus food and energy, which they consider it as more volatile, and there's also adjustment for changes in the consumer behavior. But if we're going to switch it to core PCE, it make a lot of sense why the Fed is monitoring this core PCE very closely. Yeah, so it make a lot of sense where if you're going to look at historical between 1 to 2%, during this period where inflation was, or interest rate was very low, inflation low, it literally sit in the band of 1 to 2% very nicely. Compared to earlier, yeah, it was very, a lot of very fuzzy, a lot of noise, right? It moved out of the band. but this core PCE is really within the span. So where are we today if I'm going to look at the core PCE, which I think many of us will listen from the reports on the news channel about CPI, but not core PCE. But today, I think onwards, you'll be more inquisitive to keep on looking at the core PCE. That we are here today is at 2.8, is still quite far away from the 2% band. So therefore, he make a very clear stance that I am in no hurry to cut interest rate. But until 2nd of April comes in, he make it even firm that no, it's not going to cut interest rate. And of course, that anger President Trump, and there's some tussle around there, but it seems to have resolved, which I'm quite happy. But with the 2nd of April, the tariff shock, guess where the inflation will be in months to come, which I think is quite straightforward. Inflation is likely to move up. Now, a lot of us mistaken that when tariff imposed on, say, for example, on China, that a lot of us make a mistake whereby they thought that the importer, which is China, will have to pay the tariff, but no, it is not. It is US, the importer who import from China, the shops, the importer will have to pay the tariff. So when they pay the tariff, which is US importer pay the tariff, export from China, import from US, importer pay the tariff, and they will have to mark up the price because they will have to pay, US importer pay the tariff, and for that reason, they have to mark up because they have to make a profit, because I'm paying to my government the tax, or duty, then I have to make money because I'm running a business, so I have to pass it to the consumer. So I will reckon that the months to come, do look out for the core PCE, which is really very gentle because it minus off food and energy. If it pick up, then again, we study the relationship between inflation and the NASDAQ. We see how inverse relationship they are even today. So this will give us a very strong clue where the stock market is going to hit. Yeah. So the Liberation Day on 2nd of April 2025, will the trade war or tariff end anytime soon? If you're going to ask me, I don't think so. In fact, even there is a mellow down in the approach, but I think the damage already done. So what I'm seeing here is that different, there's a lot of collaboration outside of the US that's happening right now. So we just got to wait and see. So if you're going to ask me, will the trade war or tariff end anytime soon, we just have to keep watching because things are very volatile. But I would say that it has sent the world a very clear message that is never going to be easy. So the good years of the last 40 years of free trade is at the moment, I wouldn't say it's over, but I think outside are trying to form this new deal. We don't have much answer yet, but it's going to be have a period of great volatility and uncertainty, which I think for traders, I personally welcome it. We just have to be very nimble with our trade in the US market. So now let's go back to the next FOMC meeting. So again, just recap on 21st March. Jerome Powell find that economic data is good, unemployment data is stabilized, inflation not too sure, but with after 2nd of April, the next FOMC meeting that we decide on the interest rate, I think highly unlikely he will minus or cut. Neither I'm not too sure it's going to increase. But if you look forward after 2nd of April, what happened? What do you think that the economic activities will be? I think it's not going to be great. It's not good, maybe. Unemployment rate has stabilized. I think there's a lot of we got to be very careful. We got to look out for data. So I don't think there'll be good news for unemployment in months to come, not just 1 or 2 months. Inflation remains somewhat elevated. Definitely, I think inflation is part of consideration because of all this tariff that's happening. So now, if I'm going to have this 3 checklists compared to the March, I think May, everything will be a sad-looking icon. So I do not think that the interest rate will ease anytime soon at all, which is not good news for the stock market. So where we explained earlier. So I just want to explain all this fundamental reasoning. Then I hope that there'll be some exchanges later. Very quickly, I'm going to move on to the technical part, which is the very exciting that how we're going to time the market, using technical studies. So what is the likely direction of the economy and inflation to be? I think the answer is pretty obvious. Now let's explore the technical part, which I always personally I will start off with. Now it's not a rule that I have to do that, but it really depends on individual. Some of you are fundamental, some of you are purely technical. I'm both. I would like to seize out for opportunity using technical studies first. Then I will confirm with the fundamental development. Now, the last day of February case study on monthly chart. So these are the monthly case study that I have, well, with the group of friends that I have, that what we saw on the last day. The very last day I captured this because the February, there's only a short month on the 28th of Feb. And what I saw for NASDAQ, it was a inverted hammer. And that was January. And December, I saw this. So I was very cautious because November, I think I have a session. I say I'm very cautiously bullish about the US market, if I did mention that. If not, that will be another session, maybe with SGX or whatever. I can't remember because I have quite a few sessions. So why I say cautiously bullish? Because then I saw a euphoric move lasting for 2 years because of the AI craze. So early we studied about how to recognize the euphoric movement, the steepness of the price change. Until December, I saw this inverted hammer, and followed by the one that I'm very confident was technically. Whenever I see that there's this two inverted hammer, it got me really excited because this is a monthly chart. You can see on the 60 minutes chart if you're trading in other markets, let's say coffee or what other products, whatever you're trading in. It can be applied in any time frame. But for this time frame, I apply on the monthly chart, and I got pretty excited. I know that technically it's telling me, and that was at the end of February. So technically it's telling me that the peak seems to have established, meaning that I'm not exactly keen to buy on the US or the NASDAQ. Yeah, I'm more looking forward to cash out, and maybe is there opportunity to sell short. So that was my thinking on the crossover on the 1st of March, on the next day. So then this chart was prepared about 2 weeks ago. That list low was on the 7th of April, and that we saw that it's not just two double inverted hammer here, but it also means that whenever you see there's a two double inverted hammer, it also represent a very true blue double top. Yeah, so the market kind of opened unchanged in March, then it came down, and followed by what was the March news? I can't remember. Maybe it's inflation related, but definitely in 2nd of April, the news is on a tariff war. Yeah, so where is the market heading? So maybe you let me know shortly later during the discussion, the Q&A. So again, what qualifies a bear market? Is it a down 20%? There is a bear market already, or down 30%? Honestly, there's no scientific boundaries what is considered a bear market. So some say it's down 20%, some say it's down 30%. But I have a proposal for you is that how to recognize bear, which I'm going to share in a very shortly. But let me just share with you the next slide here, which we studied into the last 100 years of the US market. And during COVID-19 was down 37%. I think I missed out the percentage here. And most of them is down 30% to consider as a bear market. Some say it's down 20%. During the Great Depression, it was down 89%. And the next one that's very bad, it was during the 08 financial crisis, it was down 54%. Now, so my proposition is this: you don't have to wait until it's down 30%, then you consider it as a bear market, and you became so panicked that you start to plan what to do, all this and that, or I should not buy the stocks or whatever. But what you can do is that you can take a more proactive role. When I say proactive role, is that exactly what I did. I just share with you the euphoric movement, how to recognize the euphoric movement, and month to month, quarter to quarter, day to day, month to month, week by week, we look at the technical charts, what is it telling us? Because when I look at a chart, is actually I'm studying into the human behavior of greed and fear. It's not just chart, it is looking at the data of human behavior. So all this inverted hammer, it make a lot of sense. So we saw that in December in NASDAQ, it was a inverted hammer. In February, it was another inverted hammer. That historically, I do not see such a wide range of inverted hammer. And with that, I totally respect that behavior. And I keep watch on the development. So when it's being announced, we have to act quick. Yeah, so that's what I'm seeing here. And just to recap here is that fundamentally something have shifted. This globalization that when PM1 mentioned that, I know election is in the season, I'm not choosing the side, but what I'm trying to say here, when he said that is true, and the last 40 years of free trade seems to be over. Nobody knows, but the whole dynamic of free trade that created the prosperity in US is coming to an end at this point in time. It may end, I do not know, but we just have to be very careful what's going to happen. And it seems to be since 2nd of April until today, only about 3 weeks. A lot of things are developing. Then suddenly there's a swing to the China consumer side. Things are moving very fast. So we have to keep a very close watch on what's happening right now. And again, we don't have to wait until that's down 30%, then we think about the bear is here. We take a proactive role to look at the fundamental and technical development. So now, a case study in January 2025, which is at the beginning of this year, which I'm not too sure if I share IG, but definitely if you look at my YouTube channel, I present it on YouTube because every time I share with an institution, with partner like IG, and when I felt that's good, I think I also need to let my wider audience knows that this is what I'm seeing here. I will also find some time to put on my YouTube channel as well. Now, so this was my sharing in January this year. Now, January this year, it means that when I saw December close, and that was a monthly chart, I found that's really interesting. It's not just an inverted hammer that I'm seeing here. Now, if I'm going to look at the all the trough, yeah, I first started from trough, 1, 2, 3. I joined them together. Can you see that how perfect this trough has meet each other? Which is then I will start to do a studies on how about I mirror it to the significant high. And when was the significant high for NASDAQ? For those that maybe about my age in their 40s, 50s, or even 60s, you may remember about what happened to NASDAQ in year 2000. It's the dot-com boom and busted. So when I mirror this to the significant high using this uptrend line, mirror this on the closing, and when I saw this reaction, it got me excited. It's my another confirmation based on these studies. In fact, the first time we meet, it was July last year, which July, I presented a topic, I think I posted on YouTube as well. I've been watching it very closely since July last year. And of course, the market continued to evolve. And then you know what happened to January, it pushed up and it formed a double top. Then now markets start to shift and move with a fundamental development. So that will give me the confidence that things are shifting. I have to move. I cannot be, because you have to understand that I born in the year 1972. 1972, when I was a young adult, as a child, as a teenager, as a young adult, my whole being shaped that the market will always go up, especially for the US market. Yes, which was true. Market will always go up, but the whole being about myself as I grew up is that I'm conditioned in the US market is always go up, which was true when there's free trade. But now things seems to have changed. Yeah, so we have to keep a lookout for what have said the US and the bull market. It was free trade, but now this free trade seems to be ended. I only can use the vocab seems to be ended. We have to keep up for development. And if it's it's true that this global trade is ending. It also means that the glorious day for the US market, we have to watch it very closely. Could it be more correction to come? Maybe. And technically, we're seeing a lot of that. And that's what happened here, the recent low, which is on 7th of April. Until the 9th of April, Donald Trump decided to extend the 90 days, the tariff, the second tier tariff, by another 90 days. So market have did some rebound. So in short, before we go into the Q&A, is this that, so what's your take? Whatever I have discussed with you, my view can be totally wrong at the end of it. So therefore, I say that whatever I share, all these are studies based on my personal consumption. So it's definitely not a recommendation. So please check with your financial broker who is IG market. So what do you think that, is it going to be this move up at the moment? The low was here and now is at 18,000, is about here. Yeah. So do you think it'll continue to move up and break the last year and this year high? Or do you think this move up, this is called retracement, is for us to prepare for the more bear market to come? So I'll let you decide, and maybe we have a time of discussion. If there's some question, maybe I can take about, if there are, I hope to take about 3 to 4 questions before we wrap up for this evening. Yeah, so this is a confirmation of the confirmation. So what we're seeing here, earlier was starting to the monthly chart, the quarterly chart, but now it's starting to the weekly chart. I hope that you can follow me, is that how I deploy different time frame and deploy just simple lines, trend line, where I think some of you, if you follow my some of my classes, mostly are free with partners at IG, that I love to draw simple trend line like this. So you just have to look out for significant trough that you join them, and it has to be a perfect alignment. When it's a perfect alignment, it also means that this trend line is so classic that once it break, it means that you have to be very careful. So with the inverted hammer on the monthly chart, but this is a weekly chart, we saw how the market break even before the 2nd of April. Yeah, the market broke before the announcement. Announcement came in deep even more. So what do you think? And just want to give you some contact if you like to follow me continuously. Like what I say, whenever I share with partnering broker like IG, if I feel really whatever I deliver, I feel that there's a case for it, I think I want to archive it. I think wider audience should get to see it. I'll post it on my YouTube channel. So this, I provide a QR code. My YouTube channel, my name is Kon Hao, my name. You can search for it, you should be able to find me. So for more resources, you can visit my company, Weipedia.com. And of course, you can email me, konhao@weipedia.com, if you want to spark some ideas about mid to long-term trend, but definitely not a recommendation, but it's more like exchange some ideas, what do you have? Or maybe whatever I presented, you find that there is, I need to tweak a little bit, you please do let me know. So I'm just going to hand this time back to Jin Rong. Yeah, thank you.
Okay, thank you so much, Kwan Hao, for your presentation and around the US market. I think there are a few questions, quite a bit of questions actually. I'll see whether I can combine some of those similar questions. So I think the first one largely revolve around Chinese market. So these attendees said in the past, when US stock market went into bear market, the Hong Kong market fell into bear market afterwards too. Do you think that Hong Kong market has now decoupled from the US market?
That's a very strange question, because you say that the US went to bear and subsequently Hong Kong go into bear as well. So how could it be a decoupled market then?
Yeah, yeah, that's the I think probably what the attendee is asking is whether the relationship will still stand, whereby when the US market go down, Hong Kong market will go down as well. I think it's similar to another question from Mr. Fu, who is asking about how about other markets like China, if it's going to be negative for US.
Okay, I think then what I suggest to do is that personally, earlier I mentioned about how I study the market, is that first I will look at the technical first. Since we have question on the China market, which I'm so glad that I'm with IG because I could deliver on any market, because IG, they have a wide range of product of any market. Because sometimes when I deliver with a exchange, say for example, the Singapore exchange, I only can cover Singapore market. But with IG, I think I have a liberty to cover a lot of other market as well. So let me just go to China A50. Yeah, since you asked me about China A50, that means relating the question about whether the when US down, will China be up or down? Then or China, Hong Kong? Are you referring to China, Hong Kong? I believe you are referring to China and Hong Kong as well. But anyway, if not, then we can discuss that again. Let me just try to find out a bit more on the long-term chart here. Yeah, so this was done some time ago here, where that was last month, right? Yeah. So I didn't prepare for this. Now, what we could see here is that if earlier we mentioned about the euphoria market for just minus off the word China A50. Now, if let's say this is a stocks that you don't have no understanding just by looking at the chart, I would say that based on the past development, I do not see any euphoric movement. Yeah, it's more like let me just clean this up, allow me to do that. So yeah, so it's quite smooth. And what I'm seeing here is, or maybe I should call another chart which I've done a study on. Just give me a moment. Okay, I did a lot of study here about China market, China stocks. No, let me go to China indices. Yeah, I think I have a page I put China indices. I hope you are seeing my chart. If not, then just give me a nudge. Just look at it technically first. China index, yes, that's right. Okay,
Okay,
so
while we are
some.
waiting, I think the attendee has sort of clarified. So I think he wanted to ask whether Hong Kong market has now decoupled from US, and do we think the correlation still holds? So he just want to clarify that part.
Yeah, I think I can answer you this question because for in one huge economy to another important economy, which is in Hong Kong, is a very important economy in the East. To decouple is not just the last 3 weeks. Yeah, so it will take a long while. So I don't think so at this point in time. I think it's too quick to tell. So what we can do is that there's so many transactions, there's so many relationships that's going on just between US and China itself. So much so they want to decouple from each other, but you know that it's not going to happen. So in between, there'll be a lot of rollout and retract, but that create a lot of volatility. But I think importantly is that what we can do is that look at the market itself. Let's say if you talk about Hong Kong, then maybe what you can see is that we look at the I think a lot of China company have listing in Hong Kong. So we look at it in this totality, where that was during the 2021, during the SARS. I think during this SARS, what happened here is that the Chinese government know that the SARS is a big thing. It's going to hurt the economy. As well, they take the opportunity to clean up the whole system. And which I like it because there's only two things that I don't quite like about the Chinese market back then, is that they are very heavily leveraged on the property market, which I think they have do a good cleanup. And number two is that they also do not like what they saw in the US market, because it's that few big companies that monopolize the whole market ecosystem. The Chinese government do not like that. They also kind of wanted to clean that up during this few years. So which to me, it was bring a lot of inconvenience during that period. But in the long term, I think it's pretty good. So what I'm suggesting here is that during the last month topic about China, topic in IG is that I'm suggesting that this is one wave, two wave. Could it be the third wave is coming? With the 2nd of April, the tariff shock, it seems like the Chinese side, also Hong Kong related, because a lot of Chinese companies are listed in Hong Kong, are gaining some traction here. If you look at the from 7th of April onwards, the up move compared to US and China and Hong Kong, the up move, it seems to me there's more upside than the US market. So that's what I'm seeing here. But maybe what I should do is that we look at the broader picture on the China A50 as well. And we could see a very clear cut. These are their history are very short for the blue chip stock in China. And if I'm going to relate to what's happening right now, a lot of product that you use, including the car in Singapore that we are buying from BYD, more and more of my friends are buying BYD cars. 2 years ago, they talked about Tesla, but today what I'm seeing they have is BYD. So even those Tesla fans have switched over to BYD in my circle. That we could see that the physical product is already there, but the stock market compared to 2006 is still hanging around here. So therefore, I'm seeing a lot of value here. And I suspect that we could be in the third wave in the making. And what I'm seeing here is that the close of this month, which is not closed yet, there's this hammer that I'm seeing here. It got me really excited. Could I be right that this could be a first wave, second wave, and third wave in the making, with the fundamental news on 2nd of April, the tariff, and seems like is China, the Chinese market are gaining some ground. Could it be the one? I do not know, but you just have to take a very close watch on what's coming ahead. But what I can say here is that technically, definitely, I don't see in a span of this few decades, I don't see any euphoric move other than this. These are that was then, but during this period, I don't see much of a euphoric move, and I think there's the downside risks are pretty low, I would say. But if you're going to ask me about the US market, if you're going to buy and hold for long term, I think the downside risk is pretty high. For short-term trading opportunity, yes, I think that is quite a bit there. Okay, I hope I answer your question here. Yeah, looking at it technically, fundamentally, I'm not sure whether it's going to have the decoupling effect. We're just going to keep watch very closely in weeks and months to come.
Right. Okay, I think there's one question, I think quite interesting. So I think he is asking about what are the signs or indicators that we can look out for if markets were to turn around back to bull markets. So Kwan Hao, do you have any, a favorite pattern that you would like to gauge whether a bottom is in?
I think it's a very good question here is because earlier I showed this chart. Maybe you can take a snapshot of this chart. I think, let me just get to this page. You guys can take a snapshots. Then after that, what you can do is that you just do your own study from here. Yeah, take a snapshot first. They will do your own study from here. Give me a moment. Let me just close this. If not, it's going to take out a lot of data. We're just going to slow things down. Okay. Let me just go to the Nasdaq again. Oh. Yep. Okay. So what you can do is you try to draw this two lines, and when the market resume back, maybe I should can do just clear this up so we can have a clearer picture here. Okay, so now this month if we saw, but the April month have not closed, if it closed with a hammer, I think likely just technical study, based on technical study, with a hammer, I'm expecting that the next move will be up, but I don't think those so that you'll break this high, which is last year high and this year high. So the up move can be quite a bit, maybe 50% to 61.8%. Then from there, just going to continue to look up for development. My expectation is that market may continue to move down. Yeah, because the fundamental have shifted from a globalization to not exactly sure. So that create a lot of uncertainty to the market. When there's uncertainty, market is not clear, it hurt a lot of industry. They may have some domino effect from time to time. But what happened here is that technically, if you ask me that if you resume to back to bull trend, maybe. And what I suspect to do is that it has to break above last year and this year high. And then it got to sit here and move up. And of course, for that to do, for the market to do that, it must come with the fundamental shift as well. So what is there that caused the US market to break above this too high? You can use it on S&P or Dow Jones, you're able to see a very similar picture as well. So your question is that possible that it break the all-time high and move higher? Yes, but it must also confirm with some fundamental development, which at this moment, personally, I don't see that. So my study is always on quantamental, first technical studies, where if you look at the monthly chart, to me, this one make a lot of sense. Yeah, go all the way back to .com, and it was so reactive in the month of December last year and January this year. No, February this year. Yeah, then news start to appear and this thing happened. So I would say that based on the current fundamental, I would likely say that this will more likely be the case, or market could be continue to be very volatile, heading nowhere. It's quite similar to Tesla if you look at it over the last 2021 to today. In fact, the whole market range is just heading nowhere. Yeah, it's just have a huge swing up and down. So that is my logic that I'm seeing. I hope that you're happy with the answer.
Okay, so that is from the technical side of things, but also to incorporate some fundamental aspect to it as well.
They have to, because
Yes.
we are looking at the monthly chart. It will always confirm with fundamental development. Yeah, when you look at the monthly chart, you will always confirm with fundamental development. But if you can apply what I just shared with you, the technical aspects on the minutes chart, for that, sometimes I don't include fundamental because we're just trading to the noise, the minutes. You try to apply what I shared with you tonight. You try to apply the minutes. I think you'll work very well. But once you cross over the week, month, quarter, yearly chart, then you will have to incorporate the fundamental development.
Right, so that's really great advice. So usually people when they trade, they just look at the daily or maybe the weekly. So something to learn from Kwan Hao that he actually zoom it out to the monthly or even the quarterly, and then to gauge the fundamental aspect of it.
Yeah,
Yeah,
even
so
the yearly chart as well. Yeah, I can show you. Yeah, maybe the next question, let me just move ahead of you, is that the bonds. Yeah, to me, the bonds is so important because if you ask me about, and I look at intermarket analysis as well, because I think those questions I just received, many participants are very interested in the US market, the health of the US market. Then what we can do is that look at the bonds market because it is so important. The latest YouTube that I'm having, which I'm going to launch this Sunday, which I already prepared. This was a case study that done for the US bonds, by the way. That was 2016. We saw inverted hammer. And by the way, this was all the way to 1980 to 2022. I did this analysis in 2022. So I saw inverted hammer. It's very similar to the NASDAQ. Don't you find that? 2016, there was inverted hammer. 2020, there was an inverted hammer. Now, if I'm going to draw a straight line across, yeah. So this became a resistance. So I keep watch, patient, yeah. 2016, I saw inverted hammer. 2020, if I draw a straight line across this, became a resistant line, and I saw how 2020 reacted to this resistant line about 175 around here. So from there, I got this idea that maybe the US bonds has topped already. But I do not know what's a fundamental development until the COVID hit, right? You can see that how US mishandled the whole COVID situation. So the whole idea about bonds is that trust, that we investor, we buy the bonds, the return is interest rate plus principal. So, but we must have that trust. So what happened here is that this is a yearly chart. This is a year chart. I even look at a year chart, so you see that how interesting the market is. But this is, I switched the monthly chart, you see a totally different picture. But when with the year chart, you could see that there was inverted hammer. But on the monthly chart, and how you can apply that in any market here is that you play with different markets, you play with different time frame. And with that understanding on two inverted hammer here, then I draw a straight line across. So when did the bonds market start turn bear? It's not just the Liberation Day. A lot of economists and market analysts say that it was because of Liberation Day that bonds are selling. No, the bonds start to break this main uptrend line that lasted for 4 decades. Yeah, if I'm going to draw. Unfortunately for TradingView, they don't give me the historic of all the way up to 1980, but the lines are the same. Yeah. So if I draw 2022, it broke below this uptrend line historically. So I know that something has shifted. Can you see that there's a lot of similarity that how I applied in NASDAQ earlier, this super uptrend has been broken. And bonds is the big market. Is a big market because when that happened, so what happened to 2022? It was inflation. So where investor kind of lost confidence, the trust, how US mishandled the SARS, then followed by the inflation at 9%. So we have totally kind of lost that trust, and not just me, but I'm talking as a whole. That's why you see that the bonds even today have, in fact, the bonds have turned bearish. Yeah, if you talk about this high to here, you go and calculate the percentage, how many percent have moved down. And I'm surprised that over this last few years, no one actually talk about bonds. When I talk about bonds, to me, the audience don't seem to be interested until of late. They start to have some interest on the bonds. But to me, the bonds direction technically is moving down. But if we combine with the fundamental developments, that we're seeing that the bonds may be on the long-term downward trend. That's what I'm seeing. So if the bonds is down, guess what will be the interest rate will be, or the yield? The yield is moving higher. If the yield is moving higher, so guess what the stock market will be. So we tie intermarket together to form an analysis, and I think you should get a very good clue what I'm talking about. I think Jinrong, you can elaborate if you want to.
Yeah, I think just nice. There's really one question on the bond market as well, which I think we have heard it through the media headlines, which is that Trump wants to bring US Treasury yields down so as to bring down the US debt rollover cost. What do we think of that? Does that mean if Treasury yields remain persistently high, he will continue to crash the markets? So any thoughts on that?
I guess he has his wants and needs, but sometimes is not so straightforward, right? So yeah, and I know that there's some theories saying that he want to crash the market so that it enter in recession, so that the Jerome Powell will cut interest rate. Yeah, so these are maybe the YouTuber theories have on Donald Trump, because Donald Trump didn't say that. Yes, maybe it can be true, but I think it's beyond that. I think I just help you to unlock a lot of things from bonds. Obviously, it's coming down technically and fundamentally as well. Yeah, so I don't have to go to the fundamental reason. So the logic about the bonds is very important, because when bonds are down, there's no negotiation. If bond is down, yield will move up. Yield also represent interest rate. When interest rate move up, you also represent that inflation is up. Now, everything is tied up together because when investor feels that the inflation is moving up, they will buy up the yield, the 2, 5, 10, 30 years yield. When they buy up the yields, the bonds coming down. That's what we're seeing here. When all these things happen, the stock market will be a lot of headwinds. But of course, all don't time it together at the same time. There'll be some lagging effect. But if you look at it very clearly, since 2020, we spotted about the double top for the bonds market. You see how nicely it developed. So over the last 5 years, if you notice, if you follow me with IG, I've been stating that for the US market, yeah, I know it's bull market based on the EV and the AI, but I'm very cautious about the bull because I see a lot of euphoria movement. And beyond that, then I also saw what's happening to the bonds. But I cannot package it to present to you because it's very far away and I may lose my audience if we're going to bring in all these bonds, all this and that. But I felt that time have passed and things have developed for me to put that in perspective. Today, you're able to see a much clearer picture. So bonds to me is a very big thing, and you can bring up the gold as well. So ask yourself why the central bank has been buying gold since 2022 in a big way until today. I think today they're still buying gold. I'm not sure, but we have to wait for the Gold Council to publish the data. So everything is tied up together. Yeah. So back to you.
Yeah, so I think looking at that bond chart, to me, it does seem worrying. Doing bond breaking down to that support trend line. I mean, if yields remain high, generally investors will want a higher premium for holding equities, right? And at a time where growth is slowing, how are they going to deliver that kind of a premium for investors? I think that is the challenge that companies will have to face. Yeah, I think one last question before I just flash the survey chart. Basically asking about, apart from gold, knowing that gold has been crushing a multiple record high, is there any other areas or sectors that we can benefit in terms of a market downturn?
Yeah, definitely. And what I'm looking at is that you look at I personally believe that whatever we described here today, with together with many investors out there, that we sort of feel that inflation fear is still lingering around. And with the tariff uncertainty, inflation is not going to come down. Yeah, I'm not talking about more shock, but just talk about tariff uncertainty. Yeah, if it maintain this status, don't know where. So I think the inflation, I don't think is going to come down. Yeah, so inflation will be slowly creeping up, but of course with another round of tariff shock, inflation will pick up quite fast, quite fast. And so when that happened, you could see that who is leading the inflation trend. Maybe Jinrong will recognize that it is gold. Gold has been leading inflation trend, especially in the year 2022. So I always have this saying. So again, I have to repeat this: is that gold is the leader of most commodities market. A lot of commodities are still lagging behind, and some already pick up, like the meat prices, the cattle, live cattle, coffee, but some are still lagging behind. And gold is the leader of most commodities. And I always say that due to their own time and season, the rest of the commodity may pick up because of the fundamental understanding of the inflation is still on a climb. So do look out for other commodities, and there's a lot of laggards where you don't have to buy the physical commodities or the commodities ETF or whatever, but there are always a lot of stocks that are tied to commodities. Say, for example, like palm oil. So you can look at palm oil stocks, those that are paying dividends, where I do believe that oil or palm oil may find its room when the time is right, but not yet. But therefore, I'm buying into some of the palm oil companies that pay dividends. So when the palm oil start to move up, so these companies, I hope, will also move up. So do look out for laggards. I'm not suggesting that you buy palm oil. I'm just giving you an illustration, okay? By if you say that, oh, can't recommend palm oil. No, I'm not. I'm just giving you an illustration. So do look out for other commodities. Study the charts. Understand about fundamental analysis means that if you're with me, look at how beautiful when the chart will give you the timing. Then according to the time and season, the news will surface. Then you know that you got your analysis right. Then you just have to double down your investment or portfolio at a point in time. So with that, thank you so much.
Yeah, so commodities laggard, hopefully we can bring Kwan Hao back. I think we need another webinar talking about some of those, analyzing some of those commodities chart for us.
Yeah,
So once again,
excited.
thank you so much for today's webinar. We have a few minutes left, but please don't go away. Do allow me to share my screen with you because I need a little favor. This is the survey form. So before you leave, please just do a quick scan. It's just a very short survey, 3 to 4 questions. Input your feedback and also your comments on what kind of content or topic that you actually want to hear for the next webinar. So I'll just leave it here. So just do me this favor and just help me do this survey. Okay, I think there's one question asking whether there will be a recording. We will have this recorded, and we'll upload it over the next few days. So you can actually access it on YouTube. Search for IG Singapore. The video will be up there. Okay, so with that, thank you so much for tuning in for today's webinar. And of course, thank you so much to Kwan Hao for sharing his insights once again. As mentioned, I think we need to get Kwan Hao back for another webinar around commodities. So stay tuned and of course, have a great evening, everybody.
Yeah, thank you all. Thank you, General. Thank you. Bye.
Thank you.